Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert, Dave Wolcott. Now, Dave is the CEO of Pantheon Investments, a commercial real estate investment company that specializes in multifamily and self-storage investments. Now, Dave has a sincere passion for helping entrepreneurs build wealth by passively investing in superior real estate and alternative assets that provide predictable cash flow, tax efficiency, and upside potential as a reliable alternative to the volatility of the stock market. Additionally, Dave is the author of The Holistic Wealth Strategy, a framework for building real wealth and living an extraordinary life, and is also the host of the Wealth Strategy Secrets of the Ultra Wealthy podcast. And so with that, guys, it's an honor to welcome Dave Wolcott to the show. Dave, how are you doing today?
Awesome, Kevin. Really grateful to be here, connect with you and your audience.
Yeah, excited to have you here and excited to just talk shop with you. I know we were chatting a little bit before we started recording, and lots going on in the world today, and excited to chat with you about that. Excited to talk to you about your overall investment strategy and investment philosophy. But before we go down those couple of different rabbit holes there, Dave, maybe, I gave you a brief introduction. Maybe take a few moments for those that aren't familiar with you. Tell us a little more about yourself, your background, and ultimately how you found your way into this world of real estate.
Yeah, absolutely, Kevin. So I was raised in a middle-class family in Connecticut, and I was told that the recipe for success was go to school, get good grades, you're going to get a job, and everything would work out, right? So I kind of traveled down that path and had the opportunity to join the ROTC program at college. And joined the Marine Corps as soon as I got out after school. And the Marine Corps was an amazing experience. I got to travel the world, became combat tested, and really learned things that they just don't teach you anywhere else. Things such as leadership, teamwork, and integrity. And then after serving for 4 years, Kevin, I transitioned into corporate America, got into the tech industry, really on the consulting side. And at the same time, my wife and I started building a family. We had an 18-month-old running around, running us ragged, trying to figure that out. And then on October 24th, 2000, we literally had triplets. So
Oh my gosh.
overnight, like quadrupled the size of our family. And you can just imagine. I mean, this is something you read about in the newspaper, right? Or you see it on TV. But I'm like, wow, I am literally living this. And the biggest thing that was on my mind, Kevin, was it was financial security for my family.
Mhm.
How am I going to now, provide for my family, because they mean everything to me, right? And that was so important. So, the day after, I literally went and saw my financial advisor, and he said the same thing that they all told me, which is, max out your 401k. You've got kids, you can put money in 529 plans, right? And things will work out, and you'll probably get a 7% return. So I realized right then that, the ultra wealthy were not investing this way. So it really launched me on this obsessive journey to figure out how the top 1% were building wealth, because I knew it wasn't as a retail investor in the stock market. Right. So at that point, I started investing in all kinds of assets, everything from oil and gas. On the real estate side, we did single family rentals, raw land, retail, office parks, multifamily, all kinds of different asset classes. And keep in mind, this is back in 2000, right? There weren't all that many
Yeah.
resources around, including great podcasts and things like this. So started investing in all these alternative asset classes. Started building my own business, and if you refer back to Kiyosaki's cash flow quadrant, right, it was really that transition that I made to the B side of the quadrant and the I side as an investor, to that quadrant. And so fast forward 20 years later, I started Pantheon and really wrote this book, The Holistic Wealth Strategy, to really encapsulate my learnings and try to build a roadmap or a blueprint so that other people could build wealth like in a fraction of the time that it took me, right? Take all of these different learning lessons and really kind of put them in a system, so
Mhm.
people could really accelerate that.
Yeah, no, that's great. I appreciate that background, and very excited about diving into the your overall investment philosophy and what that strategy looks like. But just I want to back up a little bit because we're talking about you made a comment about this is back in the the early 2000s when you were investing in all these different alternative asset classes. Back then, this truly was a good old boy network. If you didn't know somebody, then you had no idea of how to get your investment dollars into these alternative types of investments like exist today. General solicitation was not a thing. You couldn't listen to podcasts. There weren't billboards around town, mentioning of, investment opportunities in multifamily buildings or office or what have you. And so just curious, as you went down that road and that path, how did you go about tracking these opportunities down? I mean, I would love to hear about that story if you would. And we don't have to go too far deep, but I think it just shows to your ambition, right? I mean, because I'm sure it wasn't easy.
Yeah, definitely wasn't easy, Kevin. And I'll tell you, I mean, this is how I've actually refined as part of my strategy. So in phase two of the wealth strategy, I'll give the listeners really the equation to net worth that I really developed over time, which
Mhm.
is your net worth is equal to your financial IQ plus your mindset IQ plus your physical capital plus your relationship capital, right? So that really summarizes it for people, right? And to answer your question, right, it was relationship capital. I was networking with anyone I could who was trying to figure out, real estate, alternative wealth building, cash flow strategies. And it was through a series of those networks that I actually was able to get to a good operator and start doing, private placement deals back then, even
Mhm.
before I was accredited. I didn't know what any of that meant, back then, but it was really through, kind of creating those relationships and then, figuring it out. And then the other piece of that was so important was the financial IQ, right? I mean, so many people, and, I mean, look, 95% of the people out there still don't even know what a syndication is, or that you have the opportunity to go, partner on one of these deals, that can really yield asymmetric results, right? And the reason why is because we have this $30 trillion financial services, industry that's wanting you to think, stocks, bonds, and mutual funds are really the only option.
Yeah, luckily, I mean, nowadays I think it is becoming more well known, but it's going to it will take a great deal of time for it truly to gain traction through the masses. But obviously, it's much more well known today, given platforms such as podcast and YouTube and a litany of other ways to get the word out. But again, such a minute number of the overall population knows about these alternative investments and how to get involved in them. So, what I'd love to do, Dave, if you would, let's break down the holistic wealth strategy, like, and I'll kind of hand it back to you as to how to give our listeners that 10,000 foot view of what that actually means. What is this strategy, and how can they apply it to their own investing business?
Yeah, absolutely, Kevin. So the entire strategy is really underpinned by creating a vision statement for yourself, right? We all live in such a reactive time, and we spend all probably more time planning our vacations than we actually do planning our life, right? And as Tim Ferriss likes to call it, lifestyle design, right?
Mhm.
So it's really getting very clear first on what that vision really looks for you. A great question I like to ask people is to say, if you had $1 billion in your bank account today, what would you be doing? Where would you be? And who would you be with?
Yeah,
you know
I love
and
that. I
getting
love
some
that.
real yeah just getting some real clarity on what that is, because that's what gives you that fire every day when you get out of bed and you're just motivated, to have that purpose, do the things you want to do, spend the time with the people that you want to I think that's just so important. And sadly, I think a lot of people just haven't spent enough time there. So setting up your vision is really key. That's really the underlying driver. And then we move into phase one, which, Kevin, this is really all about making that paradigm shift and understanding that you are your greatest asset. So really starting to look at yourself and saying, how can I invest in myself? right? What new goals can I create that are going to support my vision? What new habits am I creating every week that are going to get me closer to my goals, closer to my vision, right? Do I have certain limiting beliefs, right? I mean, I shared that story that I bet a lot of people can, connect with is, I grew up in a middle class family. There were starving kids in Africa every day. What my mother would say. We'd have to eat everything on our plate. We'd turn the lights off in every, room that we were in. There was a lot of scarcity going on
Hmm.
in our family, right? And trying to transition that for me took a lot of time to, transition into an abundance type of mindset, right? And then trying to create other impact for others. So a lot of times we learn certain things, from our past, but we need to really kind of confront that and think through that objectively as to, how you can kind of move past that. So mindset is really the
Hmm.
key to phase one.
Yeah, no, and just backing up a little bit as far as just getting the clarity, getting the vision. You ask the question: if you had $1 billion a day, what would you be doing with your time? How would you spend your day? And the interesting thing is that I think the default for most folks is like, if I had a billion, or if I had a million, whatever the number is, right? If I had that amount of money, like they've already probably gone through that exercise initially, but they've got that scarcity mindset, right? They immediately they ask that question, but then they apply that scarcity mindset of like, but that's not me. I can never have that. That's for this person, that person, or that ultra wealthy person, right? They kind of immediately throw that limiting belief in there. And so what is a what's what's the process to break through that initial barrier? Because I think that's the big
Okay,
one,
so
right? I mean, that's
yeah,
a big one.
it is a big one, Kevin. So I'll give folks, another great thinking exercise to kind of work through this. So a lot of times people talk about a bucket list. Hey, I want to go do these things right before I die. But how about creating a top 100 list, which is the 100 things you want to do in life, you want to be, do, or have. So, for instance, for me, you know, actually living my core values is so important to me. So, I want to be living those every day. I want to live those in my business, with my family and friends and relationships. I want to live those as, who I am as a person. And that's really important. And I want to pass that down as part of a legacy as well. So, it's kind of interesting when you think about these, be, do, and have. It's not just stuff. It's just not the material things. It's who can you be, or what
Yeah.
is the purpose or the impact that you have, to be able to, get clearer clarity on that.
Yeah, no, I agree with that. I agree with that. And so, just again, going through the different phases of the holistic wealth strategy. What's next up, Dave?
Yeah, so phase two is really now starting to get smarter about all these
Mhm.
alternatives, right? And we kind of talked about that equation a little bit before, which was that your net worth is equal your financial IQ plus your mindset IQ plus your physical capital plus your relationship capital. So let's talk about physical capital for a moment. I mean, I just turned 53 this year, Kevin, and I focus every day on my health, and I always have, right? It's a major focus for me. I recently did my biological age test and came in 10 years younger than
Nice.
my chronological age, right? And so I have a goal in the next decade. I want to be 20 years younger than my actual chronological age. But so what am I doing? I'm creating habits. Every month we're doing a new biohacking thing. We've got a cold plunge, this month. Last month it's, I've got some new supplements that we're trying. And of course, exercise and the basics and things like that. But if you have your health, I mean, think about it. You could have all the wealth in the world, but if you didn't have your health, you would only have one dream, right?
Yeah.
So health is really so important. That's why I think this, holistic thing, the health gives you your energy. And then, you're going to be around in the future. I want to be there for my grandkids and things like
Mhm.
that. So health is key. We talked about mindset, again, financial IQ, learning about all these kind of asset classes. I mean, who would have known, that you could do a syndication in parking lots? right, that you're doing, or even mobile homes, right? I think
Yeah.
a lot of people, unless you're listening to podcasts and great resources and kind of proactively seeking this information, it's just not readily available. So always kind of learning, right? And this is the habit of what billionaires have, right? They're constantly, getting into new environments, new concepts, new relationships, and always studying and being curious.
What advice do you have to those that are trying to improve their overall financial IQ? Obviously, there's a lot. You even reference it. There's a lot more resources today than maybe what there were, back in the early 2000s as it relates to these alternative investments. And nowadays, I almost feel like it's the opposite challenge. There's so much information flowing out
Mm.
there, between podcasts, YouTube channels, and a litany of other things. I mean, uh, it's almost overwhelming. The interesting thing about podcasting is I've been doing it for 10 years, and I was an early adopter of podcast. Probably started listening to them about 13 years ago. And now I would say that I've got just a handful, but I have a hard time exploring new because there's so many new. There's so much information, and we only have so much time in the day. And I don't want to waste my time on things that are not applicable or that aren't adding value to me. And every time I try a new one out, it's going to be burning up energy, burning up time that might not help me progress in life. And so, again, how do we? The question circling back is, how do we filter through a lot of the noise and spend our time in a focused manner on only things that are important?
Yeah, such a great question, Kevin. And the way I like to think about it is, again, this is why we created this wealth strategy framework, right? Because it is just that. It's a framework that gives you guidelines and parameters that you can progress along wherever you are in your wealth journey. Whether you've got 8-figure wealth, 7-figure wealth, or 6-figure wealth, there's different things you can learn always at different stages, right? And then a key part of that is just absolutely having focus. If you're going to focus on some asset classes, like if it's mobile home parks, just go deep in mobile home parks, right? And just pick
Mhm.
a few asset classes that you can get smarter on. A lot of people sometimes, they always talk about what's your worst investment ever, right? And I invested one time in the Indian stock market because I had a partner who was there, was talking it up. At the time, it was going really well. But the biggest thing I learned out of that lesson was that, I invested in something I knew absolutely nothing about. And it
Mhm.
really didn't align to my investor DNA and everything. So I think getting, clear focus and then giving this like overarching strategy of how you're growing your wealth. What does it mean to you? How are you progressing? Then there's enough flexibility in there to kind of move that and customize that for what makes sense for you.
Yeah, no, that's fantastic. And just speaking to to going deeper into maybe an asset class, right? If you're looking at different investment vehicles to potentially invest in, you know, going deep is it's again fairly easy nowadays. I mean, whether it be self storage, multifamily, mobile home parks, parking, you name it. There's more than likely at least one national association, maybe multiple different meetup groups, different conferences that revolve around those very specific industries that you could be attending. So there's not a lack of information by any means. Again, it's just filtering through and spending your time, where it's the most valuable. And again, getting deeper rather than wider, I think is a good way to do that, as you had indicated. So, Dave, what's next, buddy?
Yeah, so phase three, Kevin, is really all about creating an infrastructure around your wealth, right? So
Hmm.
sometimes everyone becomes very focused on, what's the yield on this, a new opportunity, let me chase this, let me go after this. But what about protecting your wealth? Right? Because we
Hmm.
don't only want to multiply our wealth, we want to protect it and we want to build a fortress around it, right? So, having the proper estate planning, right, and asset protection strategy is absolutely key. That you need to put in some some physical entities and things like that in terms of the strategy is really important. Also, think about this is, again, people are kind of always looking at the top line in terms of ROI. What am I going to make on this investment? But have you ever looked at actual, what are your top three biggest wealth destroyers? Well, the top one is taxes. whether you're a business owner, your W-2 or whatever, you see that line item and it's typically your biggest expense. So what kind of proactive tax strategy do you actually have that's mitigating that? Now, obviously, this is a, sophisticated audience and people understand the benefits about, real estate, but, there's other interesting things. One of the verticals that we focus on also is energy. We
Mhm.
have an oil and gas fund, and you can completely offset 100% of your active income into that, right?
Yep.
So understanding, different options around tax strategy, and then something else that I've been helping clients with, and we do now for the past decade, is infinite banking. Right,
Mhm.
which is a tremendous vehicle. It's a cash value life insurance policy where you can actually put capital in and it grows and compounds completely tax free. You have asset protection to it, and the cool thing is you can actually borrow against that liquidity, from yourself, and now go invest into that next opportunity.
Mhm.
It could be your dry powder fund, things like that. So there's a lot of really good, infrastructure things that you can do that are going to add a lot of velocity and overall 360 degrees, try to, increase your wealth from that standpoint.
Yeah, I mean, one could even argue that like figuring out your tax strategy before making any investments, because that's ultimately going to drive some of the decisions that you make, even the specific investment vehicles that you choose to invest in, correct?
Yeah, for sure. I mean, I think you don't want to let the,
Uh,
tax tail wag the
Wag the
dog,
dog.
right?
Yep, yep. I agree
Yeah,
with that.
exactly. So
But as far as estate planning and other considerations along with that, that's something that I think some might think, well, estate planning, like I need to make some money first, right? Before I start thinking about, estate planning and all those nuances. But I mean, what I have found is that a lot of folks, if you're not proactive with that, you get deep into the weeds. You've made investments now, you're starting to make money, and that almost starts falling by the wayside. And I think it needs
exactly.
to always be top of mind.
Well, what's it worth to you? I mean, if you're an accredited investor, you have 1 million in assets and net worth. I mean, what do you think those are going to be if they just compound over the next 5 to 10 years, right? And what's it worth if you lost all of that? And I know you
Yeah.
have kids, and we
Hmm.
live in such a litigious society. It's important to kind of put those things into place. And just one other last piece on the tax stuff. I mean, I'm really passionate about this, Kevin. I ran a few businesses, and every year I just became so frustrated that I just kept paying more and more in taxes. We would get a more and more prestigious firm, you'd pay more, and it was really crazy. I ended up firing actually 5 CPA firms over the course of 15 years until I finally found a proactive tax strategist that works for business owners and investors, who understands all of the different moving parts, right? How does something impact downstream, if you make some kind of upstream move, right? And how can you ideally be positioned for all this? So that's really key to have someone on your team who
Yeah, but
understands
yeah,
that.
that's a great point. And I think what I take from that lesson, firing five different accounting and CPAs along your journey is that in some of them being very prestigious firms, is like, no, very few people, if any, are ever going to look out for your best interest as much as you. And luckily, it sounds like you found someone that is more proactive than reactive. But I will tell you, and it sounds like you agree, and you've had the same experience, is that most firms, most accounting firms, even if they have got other real estate clients, it doesn't mean that they're a great fit for you, and it doesn't mean that they're going to be forward thinking and proactive with regards to your the tax strategy, and just ensuring that your business is tax efficient as possible, and that you guys are working hand in hand together to basically come up with a plan that again saves you as much tax dollars as possible, as forward thinking, and just um, not in such a reactive state. Again, I've had the same exact experiences, and glad to hear that you found the right fit for you and your company.
Yeah, and also keep in mind, Kevin, right? I mean, we're talking about an entirely alternative strategy. So understand that you're going to be going against 95,
Yeah.
98% of the world. I mean, just think about you could isolate tax for a minute. And, 95% of tax planners All they do is file and prepare your return. So you're
Yeah.
sending them the documents, what happened this year, just give me this information, I'll tell you about the changes, and then this is what you owe. But how many listeners out there actually have a proactive CPA that sits down with you before you actually do your filing at the end of the year, and
Mm-hmm.
you're talking about major things? We just exited this real estate asset this year, and I need to figure out, whatever it is, right? I'm planning for this, or maybe we have some recapture that's coming up, right? Are you
Well, I think
actually
yeah,
planning?
or actually having that conversation. If you and your partners are starting to think that we might dispose of this asset, I mean, that's what we do. I mean, we have conversations around the potential disposition of assets and what does that mean? Just
Yeah.
really diving into the nuances, and a lot of times that drives decisions, even sometimes as much as like it is the time. We thought the timing was right for this particular asset, but it doesn't sound like it is. Let's focus on this one. We didn't even think about maybe letting that one go. That's better suited for XYZ reasons. But just again, getting way out in front of it and getting those professionals involved in that conversation, and being proactive is it's just an incredibly valuable process to take.
Yeah, and one other point to add there that's important is what you're doing here is you're actually creating a team of alternative wealth advisors to really
Mm-hmm.
support your journey, right? Because typically people start off and they're outsourcing their wealth to a financial planner who's just, giving you one perspective, right? And they have a particular agenda with certain products that they're trying to
Yeah.
promote. But we're
Yeah.
talking about, sophisticated asset protection. We're talking about a proactive, CPA that understands real estate, alternative investments, right? All of these kind of
Mm-hmm.
things. So as you start to build this team around you, you can really become unstoppable.
Yeah. Yeah. So is it phase four? Phase four,
Yeah,
right?
yeah. Phase four, we're up to phase four. And a lot of folks, at this point say, hey, this makes a lot of sense. I get it. I'm ready to get into the game. But I don't have that minimum investment. I don't have 50K lying around to go do that, that first deal. So what we like to do is talk to clients about asset repositioning, right? Let's look and see if there's any low hanging fruit with your existing portfolio, because over 90% of Americans have their money in two places. It's either in government sponsored qualified plans, or it's in trapped equity in your home,
Mm-hmm.
right? And the last time I checked, the rate of return on equity in your house was zero, right? So even at today's interest rates, 6.5, 7, right? You take out a home equity line of credit, you reposition some of that capital, increase your mortgage interest deduction, and now redeploy that capital into, let's say, some kind of debt instrument where you can make an arbitrage,
Mm-hmm.
or a safe, real estate investment that you could do. So repositioning some of those assets. We've actually built. This was fascinating to me, Kevin, because right, I kind of went through, again, this is all from my journey, and I was sitting here saying, I'm having great results with syndications and PPMs. I need more capital. So, where am I going to get capital? So I took my 401k and I said, hey, I want to exit this thing. I'm willing to pay the penalty and to pay the taxes on this. So we created an actual 401k exit calculator. And this is really fascinating, right? So if you take 100K, let's say in your 401k, you paid 10,000 in taxes, or the penalty, you paid 10,000 in penalty, and we'll assume a tax rate of 35%. So now you have a net investable 55K. And I took that 55K and then I invested that into your next deal that you have coming up. And then I flipped that every 5 years for the next 20 years. What's amazing, Kevin, is that 55K over 20 years compounding at a rate of 20%, which is realistic for what we've seen with tax efficiency, yields you over 2 million. The 55K. Had you left it in your 401k, it's at 250K value.
That's
Plus you
amazing.
have taxes,
Yep.
fees, and inflation. right? So that's the power of compounding. That's the
Hmm.
power of tax efficiency. So it's really important that people kind of look at, do you have any low hanging fruit in your existing portfolio? And, maybe we can kind of reposition that, right?
Hmm. And that calculator you mentioned, is that on your website for folks that want to go check it out?
Yeah, we do have that. Yeah, you can. It is a giveaway. Yep.
Okay. Okay. Fantastic. Dave, what's next?
Okay, so the final one is the fun one, right? It's all about taking action. So many people are like, "Oh, I'm ready to go. I'm ready to go," but it's like paralysis by analysis. So you've got to just take action. If you really kind of believe in this, and whether it's that next syndication, or you're doing a single family rental, or you're getting into an alternative investment, whatever it is, just go for it. At some point, you got to just like make a decision, go for it, and then learn from that experience. The learning will be more important than the overall investment really will be, right? And now become an active member, and again, whether you're an LP or a GP or however that's kind of working, but really just kind of getting into the game. So taking action, and then really building massive passive income, where we've got multiple income streams that are coming in, and that they're very diversified, right? We have something that's, you don't have interest rate risk, for instance, like as part of your portfolio, right? And you're starting to build out essentially a portfolio model that's really an all-weather portfolio model, with multiple streams of income to do the things that are all aligned towards your vision.
What do you feel is a practical allocation of assets? What does that breakdown look like? Different investment vehicles, what have it? Do you have a strategy around that?
I do, Kevin. I mean, I'm really passionate about this, and like I said,
Hmm.
I've been studying this for a long time. I actually just had Michael Sonnenfeld was on my
Hmm.
podcast a few weeks ago. He is the CEO of Tiger 21, where the average net worth of their members is over 100 million.
Hmm.
So, how do they do asset allocation? It's really all around a couple of buckets, understanding that you're investing in a couple of buckets. So one of them is real estate, and that's typically around 20-25% of the portfolio. The other big one is private equity. So into your focus areas in private equity, their exposure to the equities markets is surprisingly only 22%,
Hmm.
right? And it's mostly defensive positions in equities or maybe legacy assets that they've held. And then, the rest is like fixed income, or, small speculative type stuff that they're trying to play, right? So when I kind of think about that overall strategy, right, I've got a liquidity strategy, which is using the infinite banking. So I can actually have liquidity for 1 to 3 years and manage through any economic cycle. I'm investing in real estate, right, in my focus areas, and then I'm also investing in private equity assets that also kind of counterbalance some of the real estate. Like I say, maybe there's no interest rate exposure into some of those investments, or like in the case of oil and gas, right, we can offset active income. So
Hmm.
kind of creating that right balance. But I think if you have a framework like that and just kind of think about that, you can build a much more of an all-weather portfolio. And this is how family offices, this is how the ultra high net, ultra wealthy have been investing for many, many decades.
No, that's fantastic. I appreciate that, and just getting a better sense of you and your business Pantheon, and we'll make sure that we let folks know how they can get a copy of the book, where they should go find it. But I want to kind of bring this all back home and relate this to your very own business, and we can, since this is a commercial real estate show, we can focus on maybe the alternative investments. You've mentioned oil and gas, but as it relates to real estate, what have been the vehicles that you felt have been the greatest fit and ultimately are in your portfolio today, and why?
Yeah, so good question, Kevin. I mean, the way I see the world, quite honestly, is our mission is really to help entrepreneurs and investors to 10x their wealth and create unlimited freedom in their life, right?
Hmm.
So how do we do that, right? A lot of it is around educating, just trying to educate people, trying to have resources. So we have a mastermind and a virtual family office for people who are looking to go, kind of really deep. We provide that infinite banking, which is, like I said, that liquidity type infrastructure and play that you can have. And then on the real estate side, we've been focusing on multifamily, self-storage have been some of the key asset classes that we've focused on. I have invested in, yes, new development projects. We've invested in a lot of different asset classes, but we keep, we're constantly refining and optimizing.
Mhm.
And I still think, from a fundamental standpoint, like in multifamily, for instance, we're, 6 million units short in the US. And you and
Mhm.
I live in Florida. I mean, just drive around and you can see the amount of building that's still going on, even in this
Right.
market. I mean,
Right.
it really, you can see the supply demand right in front of your eyes. So the more you can align, I think, with those macro fundamentals, I think you kind of reduce your risk a little bit, right? So that's how we're investing. We're also investing for the future, right? And that's something that family offices do as well, right? They're looking at, you're deploying capital, you're looking at it more on a 25-year basis,
Mhm.
not what's happening in the next 90 days or, what's kind of going on in terms of the market. So from that, you need to kind of assess geopolitical risks, fundamentals, things like that. So we really align to the fundamentals, and we think the fundamentals remain strong for, self-storage, multifamily, in some of these niche markets, typically Southeast, Southwest.
Yeah. So have you? I appreciate that. And has there been any adjustment to the the allocation of real estate to your overall portfolio? Given you spoke to interest rate risk, which is very present and real at this point in time. Has there been any shifts internally to your own portfolio, given where we're at in the actual real estate cycle, whether
Yes.
it be on a macro or a
Yeah.
micro level? Because again, every market's different than the next. You spoke to Florida. You're right. I mean, like Florida's is booming. Everyone knows it, and you can't drive a mile without seeing a new multifamily development or a new subdivision going up, and they're being filled up very quickly.
Yeah, so one of the decisions we made this past year is, given that some of these assets have come under pressure, right, because they've hit their rate caps and everything, so
Mhm.
they've had to pause distributions, right? And if you were planning on that cash flow for living, operating expenses, you're going to feel that, right? That's going to hurt.
Mhm.
And we all talk about having these passive income strategies, but if that passive income actually dries up, right? Do you have a diversified portfolio? So one of the other asset classes that we expanded into and have is actually a credit fund, which is private credit, and it doesn't have interest rate risk to it. And it's basically providing capital to other businesses that are scaling, growing businesses, and also taking advantage of the crisis in the banking sector, right? Where banks are, the restrictions are just even tighter to lend to businesses. So
Mhm.
if we can lend capital and get back a good return from our investors, and that is like cash flowing really well, and that's a key piece of that fixed income part of the portfolio
Mhm.
where you can have very steady cash flow coming in. So that was one big shift that we've made.
Okay, no, I appreciate that, and I don't want to lose this one about the book, Dave. So for folks that want to grab a copy, want to learn more about what it is you do, where's the best place to send them?
Yeah, the best place is you can go to holisticwealthstrategy.com and get a free copy of the book. We have that there. And also, if you want a copy of that calculator, it's at pantheoninvest.com/wealth hyphen strategy.
Fantastic, Dave. This has been a lot of fun. I appreciate you coming on here and taking time with us here today, and appreciate all that you do and all the insights that you've given to our listeners here today. And so, thank you, my friend. Wishing you all the best, and look forward to having you back on another day.
Awesome. Thank you, Kevin. Really appreciate it.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, that's your host Kevin Bupp, wishing you huge success. Take care now.